Welcome to Ahead of the Curve from K33 Research. Today is July 21st, 2026. A written version of today's analysis is available at k33.com/research. Bitcoin has settled into one of its quietest periods of the year. Trading volumes are low, institutional activity remains subdued, and exchange-traded fund flows have stabilized after the heavy selling we saw in May and June. Futures premiums have recovered modestly, but investors are still paying up for downside protection. Altogether, it looks less like a market that's building momentum and more like one that's waiting for its next catalyst. Over the coming weeks, that catalyst is likely to come from macroeconomic developments rather than crypto itself. Let's start with the overall market. Bitcoin spent another week consolidating around $64,000, and there is still very little sign that traders want to push prices decisively in either direction. Spot volumes remain close to yearly lows. CME open interest is at its lowest level since 2023, and offshore positioning has barely changed. That's not unusual. In fact, late July has historically been the quietest period of the year for Bitcoin trading, and this year is following that seasonal pattern remarkably closely. One positive development is exchange-traded fund flows. The heavy outflows that dominated May and June have largely disappeared. July has instead produced modest net inflows, and only around 1/3 of trading days have seen net redemptions compared with almost 90% during June. That doesn't point to strong buying yet, but it does suggest that one of the biggest sources of selling pressure has faded, leaving the market in a much more balanced position. The derivatives market tells much the same story. Futures premiums on CME have recovered to around 5 to 7% annualized, but that improvement has come without a meaningful increase in participation. Open interest remains at its lowest level since October 2023, while perpetual futures show the same lack of conviction. Funding rates have normalized, but traders still aren't building large long positions or aggressively betting against the market. For now, leverage remains unusually subdued. Another development worth following is strategy. The company has taken several steps to strengthen confidence in its preferred securities, including selling 3,588 Bitcoin, raising $730 million through its at-the-market program, and increasing its United States dollar reserve to $3.2 billion. Even so, the market remains unconvinced. STRC continues to trade well below the company's target price, while demand for MSTR has weakened as investors focus more on the preferred capital structure. It's another reminder that strategy is increasingly being valued not just on its Bitcoin holdings, but also on how investors assess its financing model. Finally, attention is shifting back to macroeconomics. Both the European Central Bank and the United States Federal Reserve meet over the coming days, with a July 29th Federal Open Market Committee meeting likely to be the key event for Bitcoin. Markets currently assign only a small probability to another rate hike, but any surprise from central banks or a further escalation in the conflict between the United States and Iran could quickly change sentiment. In a market this quiet, it probably won't take much to move prices. So where does that leave us? Bitcoin has entered its typical summer slowdown. The encouraging news is that exchange-traded fund selling has largely stopped. The less encouraging news is that buyers still haven't returned in force. For now, the market looks balanced, patient, and increasingly dependent on macroeconomic developments for its next meaningful move. Thank you for listening to Ahead of the Curve from K33 Research. Subscribe for future market updates, and remember to check out the full report at k33.com/research.